Good morning, everyone. Thanks for joining us this morning on this bright and sunny Monday morning. I'm Bob Reeves. I'm an audit partner at Danable McKee, and today I'm going to be talking about the fundamentals of fraud, fraud detection and prevention. To give you a little background on myself, I've been with Danable McKee for a little over 7 years at this point. I'm a certified public accountant in New York and a certified fraud examiner as well. Uh, my main areas of expertise are in manufacturing and construction, architectural and engineering, but I also specialize in employee benefit plan audits and forensic accounting services as well, which is what we're going to be talking about today. This recording is going to be emailed out to everybody. So if you're afraid you missed something, feel free to ask a question. I'll have the question panel open throughout the presentation. But the entire recording will be emailed out to you after the presentation, as well as the PowerPoint slides as well. So I want to start off, just by recapping real quick and what is fraud. To simply put it, fraud is any activity that relies on deception to achieve some sort of gain. It becomes a crime when it's a knowing misrepresentation of the truth or concealment of a material fact to induce another to act to their detriment. My favorite example of this is always like the meal expense reimbursement story, right? You have five people who go out to lunch. It's a business lunch. They're going to expense it and be reimbursed for it. The company's policy is they will not reimburse for alcohol purchases. So what does everyone do? They don't get they get a non-itemized receipt. So that way the company will only see the dollar amount when they submit it for reimbursement. They won't see what was actually, uh, you know, ordered at the lunch. So I don't know. Is that deception to achieve some sort of gain? I think it is. Is it a crime? That all depends on the company's tolerance, and what they're willing to accept. So to start off, that's the recap on what fraud is. So why are we talking about this today? Why are we talking about the fundamentals of fraud? Why are we talking about fraud detection and prevention? So the ACFE, which is the Association of Certified Fraud Examiners, just released their 2024 report to the nations about a month or two ago. And this is a report submitted by CFEs all around the world for the 2023 Global Fraud Survey. The report was based on, a little under 2,000 cases that collectively cost victim organizations approximately $3.1 billion. And the median loss among the cases in the study was $145,000. That's up $117,000 from the median loss that came from the 2022 study. That's about a 24% increase. And I've been giving presentations for Danble and McKee on fraud-related topics for about 5 years now. Every single year, the median loss is going up anywhere from 15 to 25%. So the fraud is not going away. It's increasing in today's environment with constant electronic transactions and harder to monitor transactions. 2024 report estimates that typical organizations lose 5% of their revenue every year to fraud. And many frauds go undetected. Many times, organizations aren't reporting ones they do detect to law enforcement because, it just makes more sense to kind of take the loss, disengage with the employee and continue business. They don't want to take the reputational loss. They don't want to get involved if it's a minimal amount. Like I said, you kind of just, terminate the employee and move on. So a lot of this is going largely unreported. So like I said, fraud is up on average about 24%. And the study is all based on occupational fraud as well. Occupational fraud is fraud that's committed by an organization's employee. So someone within the organization. As you can see again by the chart here, the median loss per case is about $145,000. So here's a chart of how long different occupational fraud schemes last, just to give you an idea. As you can see, most of them are going to be about a year and a half, for billing schemes, check and payment tampering, expense reimbursements, financial statement fraud, payroll, cash skimming, even register disbursements. These are largely going on for well over a year before it's caught. And then, you have some like corruption, cash larceny, cash on hand. Maybe if those amounts are a little more higher, in theft, they're going to be caught quicker, but the damage could be a lot more material as well. Another threat that we're going to talk about today, in addition to occupational fraud, outside targets are increasingly more frequent from cyber attacks as well. I think I've seen 2 to 3 businesses every year for the last, 3 to 4 years have some sort of data breach where the business is completely shut down for several days, or the information is held ransom and they have to pay money to get it back. Data breaches are increasingly more common in today's day and age. And as you can see, about 47% have costs of less than $250,000. But that also means that over 50% of them are causing organizations, up to $250,000 and higher, to rectify the situation or, to correct the damage that's done. And, the final costs for all small business victims for these data breaches, they include lost revenue and customers, legal fees, depending on, the protection of customer information. You could be looking at fines and penalties based on the rules of where you're operating in and which state. Your insurance coverage is going to go up. You're going to have to make mandatory state mandated security improvements to your business. And, there could be a marketing or other business expenses due to the damage as well, loss of reputation, loss in consumer confidence. So it's a big deal. So here's the impacts of fraud. There's an operational impact. I think we all know, right? If fraud isn't caught, it can have a major effect on the operations of the company. It can slow down or freeze operations. Companies have to put a lot of resources towards correcting the aftermath, when they probably would have rather invested in preventing it or mitigating the impact in the first place. And as I mentioned, there's also a customer reputational impact as well. It's going to impact the trust that your customers have with the company, maybe even the employees too, if it's their information that's stolen. So if you've listened to me present before, we always try to talk about the fraud triangle. In order to understand why fraud happened, or in order to catch fraud, you have to understand why it's happening. So I want to take a few minutes to go over the fraud triangle. This was created by Dr. Donald Creasy, and it has 3 elements, and all 3 elements have to be present in order for fraud to occur. There has to be the opportunity to to commit fraud, and that's the knowledge and the ability to carry it out. There's always generally some sort of pressure or motivation, which is giving, the perpetrator the incentive to commit the fraud. And then you have to have rationalization at the end, justification for why it's okay to be committing fraud or, committing these dishonest actions. And so this fraud triangle says all 3 elements must largely be present for fraud to occur. If someone has the pressure, the motivation, and the rationalization, but they don't have the opportunity, then they can't commit it. If someone has the opportunity and the pressure, but they're an honest person and they cannot rationalize going down that road, fraud might not happen. So largely, all 3 of these elements, are going to be present in order for it to occur. So opportunity, management doesn't promote integrity and honesty, the tone at the top, right? If management isn't honest or they're displaying, being loose with the rules, that's going to trickle down to the employee level and they're going to pick up on that. Weak internal control policies, a lack of oversight, lack of segregation of duties, technology or cybersecurity that's not up to date, or something more unique like a close relationship with a vendor or a customer. These are what can create the opportunities, for fraud to exist. Motivation, an employee struggling to make ends meet, change in lifestyle, more kids, new house, new car, addiction, and living beyond one's means, which is largely what is seen in most cases. And I'll show that in a little bit. Another motivation could be excessive pressure from within the organization. How, pressured are they to hit their sales targets? Are they going to hit their quotas for the month? Is that going to impact their take-home pay? Is it going to impact their standing with, their managers or bosses at the company? That could pressure or motivate someone, to start manipulating things in order to make everything look kosher. And here's a little chart, it shows the 8 key warning signs. And as you can see, in the cases that they found here that they included in this study, almost 40% of it was living beyond means. 27% for financial difficulties, 20% with unusually close association with a vendor or customer, and then, some outliers down below, control issues, someone unwilling to share duties, wheeler dealer attitude, divorce, family problems. But this last sentence here at the bottom says, since the ACFE began tracking this data in 2008, living beyond means was consistently the most common behavioral red flag that was found in the aftermath that indicated this person, was committing a fraud, and someone should have looked into it a little more. And then you have motivation. Oh, sorry, I'm going back here. Rationalization, this is them having economic factors. Maybe they're dissatisfied with their job. They're unhappy with management, perceived entitlement. Hey, I've worked 60 hours a week for the last 5 months. I was not paid overtime for a single dollar of this. I'm entitled to this money. I'm entitled, to the inventory or whatever they may be going after. The biggest thing too is they create a psychological distance from the company and who's really being impacted. They don't see the business as a real victim. They don't see it as someone individually getting hurt. And that helps them, create these rationalizations behind committing fraud. So who commits fraud? Well, there's this thing called the 10-80-10 rule, and it supports the general assumption of capability by breakdown of the population and the likelihood of fraud occurrences. So this basically says that 10% of the population will never commit fraud. Good working, honest, never done a thing wrong, won't ever tell a lie. 10% of your population, as a rule of thumb, is never going to commit fraud. 80% of the population might commit fraud given the right combination of opportunity, pressure, and rationalization. I referenced back to the expense reimbursement story I started out with, right? You have 5 people at lunch. They all order a beer. They know that they're not supposed to submit that in their expense reimbursement, but they get a non-itemized receipt so that way they can. Maybe there's 2 out of the 5 people at that lunch that wouldn't have done that had they gone out on their own. But is there pressure there because everyone else is doing it? Do they have the opportunity to do it because they know that if they submit a non-itemized receipt, it's not going to be an issue? Is the rationalization there? Maybe they care, but they don't care that much. It's only $4, management's not really going to care anyways. Maybe their manager's at lunch with them. Those are the 80%. And then lastly, 10% of your population is actively looking at systems and they're actively looking at a way to commit some sort of fraud. So that's the 10-80-10 rule of who commits fraud. And generally, it's well-respected people within an organization. They're 4 times more likely to commit fraud than someone with a lower reputation. It's generally someone that is higher up, someone that is well-trusted and well-respected. 70% are within the ages of 36 to 55. And fraud is almost twice as likely to occur in groups. Outside actors can also be a source of fraud, which we'll talk about more. You have different state-backed organizations, terrorist groups that are running, scam centers that will constantly send you phishing emails or phishing voicemails, trying to trick you to click a link to get into your company's software, a database. And then, you have people who maybe know someone within the company or someone who's been wronged by the company as well. So look for red flag data. We kind of touched on this before, but red flag data can teach employees what fraud behavior looks like. You want to use this data, to inform fraud awareness training for staff, managers, and other non-fraud personnel at your organization. Red flag data is simply what it sounds like, right? Teach people to recognize a red flag. What is suspicious behavior? What should elevate our concern? The ACFE's 2024 report that they released a few months ago showed that 43% of occupational frauds were initially detected by a tip. And out of that, 52% of these tips are coming from employees within the business. The employees notice stuff, they're more involved in the day to day. They know their coworkers, they know their colleagues, they're close, they know habits, they can tell when something's up. There's tips are the number one way that occupational fraud is detected. And it's as simple as having a 1 to 2 hour training session every year to go over the company's policy on fraud, how there's a zero tolerance for it, how everyone can help out by just, keeping their professional skepticism on guard. So here's a good case. This happened about 10 years ago, but I thought this was very interesting, and it still is actually being studied in a lot of recent case studies to kind of look into the psychology of it and how it happened. But there was a case in Dixon, Illinois, where comptroller Rita Crunwell stole almost $54 million over 20 plus years in her position as Dixon's comptroller. It's one of the largest municipal frauds in history. Over the course of the 20-year scheme, the city lacked money to repair streets and sewers. They cut back on necessary police and fire department expenditures. They were constantly having a budget crisis every year and cutting back funds in several other departments that were key to the city and its citizens. At the same time, Crunwell had 4 properties in Dixon valued at over $3 million. She had vacation homes in Florida and a ranch in Wisconsin. She bred and owned over 400 champion quarter horses throughout this 20 plus year period. And at the time her estate was seized, they found an additional $13 million in assets on hand. Her salary, which was public information this entire time, was $80,000 a year. Yeah. She had unexplainable wealth. And I'll say it again, on a publicly available salary of $80,000. She was a public official. Everything was available to the public of how much money she was making. So was there some red flag data here? Over the 20 plus years, I would think so. This was, a catastrophic budget crisis the city was facing on an annual basis. The person who was handling all the city's money had almost no oversight and was living an extreme life of wealth and luxury. So could it have been prevented? Yeah, I would like to think so. The people who worked for the Dixon city government, they just had never been properly trained to understand, the warning signs of fraud. They had known the comptroller for many years. They trusted her. You know, if they had just been taught the basic tenets of the fraud triangle, the importance of controls and behavioral red flags that tend to occur in fraud cases, they could have raised the attention and stopped this several years, before it was actually caught. And they could have saved the city millions of dollars, just by asking questions, hey, how is she in vacation on Florida all the time? Where are all these horses coming from? Where's the ranch in Wisconsin coming from? There were just never those types of questions asked or elevated, to the point where an extreme amount of money was stolen. So what are the lessons learned? We can learn from other people's mistakes. This is an extreme example, but keep in mind, tips are the most effective way to catch fraud, and employee training leads to more tips. Again, something as simple as a 1 to 2 hour training, with your employees each year could help out significantly here. If an accounting clerk who makes $45,000 a year shows up to work one day driving a $200,000 car, there are a number of reasons why that is entirely plausible. Maybe they have a significant other that's wealthy, a wealthy parent that bought it for them, or just inherited some money. The list goes on and on for legitimate reasons. But at the same time, if it's also noticed that there's some irregularities in accounts related to the accounts that that clerk is overseeing, this should be a red flag that triggers a heightened level of security. There should be managers or other personnel at the company, who recognize this and elevate the concern to a level, where someone might look into it a little bit. Organizations that do not provide this type of fraud awareness training oftentimes experience median fraud losses 2 times as much as those that do provide this training. So it's a big difference. Like I mentioned before, they're saying on average 5% of gross revenue is stolen every year from companies. How do we cut that down? This type of training, a very simple exercise, can help to do that. So who is targeted during fraud? We have small businesses and consumers. They're the most targeted during fraud. Small businesses usually have only a few people that look after their internal controls. They're much weaker and vulnerable than larger companies who may have a lot more resources or a lot more level of review. Scammers are also targeting small businesses by impersonating people and companies that are trusted. Fake invoices, business impersonation, tech support, fake checks. These are all scams that target small businesses. And it's also reported that private companies and small businesses rank highest in occupational fraud, and the biggest contributing factor is lack of internal controls. So small business fraud often occurs within the business, like we mentioned. It's mostly the occupational fraud. And it can have much more of an impact on a business because the resources aren't as great there. They're going to feel it a lot more if, $100,000 of inventory is stolen from a smaller business versus a larger company like, say, an Amazon or a Target. And the most common fraudulent areas for small businesses are payroll fraud, cash theft, online banking, false invoicing, and then you also have your outside threats too, email phishing, voicemail phishing, those type of things. The most prevalent type of fraud in small business also is the misappropriation of assets, misuse or theft of company resources. Again, I'm going to use the expense reimbursement. Again, the Rita Crunwell example, extreme example. This expense reimbursement example might be the most minimal level, but they do add up over time. Registered disbursements, check tampering, skimming cash, theft of inventory. And then again, financial reporting fraud, overstating or understating profits, revenue, assets, expenses based on kind of what the demand is, right? If, they're concerned about hitting their sales targets, is there a timing difference that can be manipulated, to make profits look harder, make larger, make sales look better, or make expenses look smaller. So that way the gross margin's bigger. Financial reporting fraud is also a big one to look out for. And this is a chart that I thought was pretty well explanatory for, how much the median loss per month is based on the different occupational fraud scheme. As you can see, financial statement fraud has the most significant one. That's because it's impacting all the decisions that the company's making. If you're giving your, people commissions or bonuses based on numbers that aren't accurate, those are all costs of fraud. Corruption comes in second place, check tampering and billing right below it. And then, you kind of go down the list. I won't go through all of them, but you can see kind of the different types of schemes and what the monthly impact is. You can see why maybe a payroll scheme can go on for 16 months undetected, because it's on average a little lower each month that is kind of going under the radar versus, a check tampering scheme, which might be a little more significant or caught during a review. So And again, this is going to be sent out after the webinar too, so everyone will have access to this information on all the charts in the PowerPoint presentation. And here again is another good example that I thought it just shows all the different types of schemes that can go on in the different categories we just went over. Starting with corruption, you have the conflict of interest, bribery, economic extortion, purchasing schemes, invoice kickbacks, asset misappropriation. As you can see, there's a ton that falls under here, which is why this is one of the more common schemes, because it just covers so much between cash, inventory, other misuse of company invoices or company resources. Again, I'm not going to go through everything here, but you can see everything that this entails. And again, you'll have this in the presentation that's emailed out. And then financial statement fraud, we touched on a few of these, but timing differences, how can those be manipulated to push an expense off to a different period or pull a sale revenue amount into this period? How can we maybe conceal liabilities or value assets a little differently to be to our advantage? If there's excessive pressure at the company for this stuff to be in balance, these are things to look out for. And again, small businesses typically have fewer anti-fraud controls in place than larger organizations, which is what leaves them much more vulnerable. If you look to the left of this chart explains, the fraud controls that are in place for companies with less than 100 employees versus companies with 100 plus employees. Looking to the left, it's about 4 from the left is formal fraud risk assessment. So we have companies with less than 100 employees, and only about 20% of them are actually sitting down and, having a conversation about the fraud risk at the company and critically assessing it to put a plan in place. Whereas if you look at companies with over 100 employees, you have about 60% doing that. So it's little things like this that are kind of missed in small businesses that can have a big impact. There's very minimal cost to sitting down and coming up with a fraud risk assessment of the company and, how we could dedicate it, plan, to maybe mitigating it a little better. There's little cost to having a surprise audit every once in a while by tasking a manager or a higher level personnel, uh, with randomizing a review. Fraud training for managers and executives, a little over 20% of, businesses with less than 100 employees are doing that. Now, like I said, it's a quick training for about an hour or two each year, just to kind of remind everyone and really hit home that, there's a zero tolerance policy. So these are the things that really make a difference, that could be implemented in. So we do have a question right now. The question was, yes, you will have access to this recording. Yes. Again, this will be sent out. It might not be immediately sent out today, but it will be emailed out within the next few days, along with the PowerPoint presentation as well. So simple things again, like, establishing a code of conduct, they can have a big, big impact. Another one too I want to point out is all the way to the left, job rotation, mandatory vacation. So if you look at that, that's a little less than 20% of small businesses or, businesses with less than 100 employees that are implementing stuff like that. That's kind of where the risk comes into, right? You have 1 or 2 employees who are kind of the jack of all trades that are constantly doing everything. And there's little oversight. That creates the opportunity. So fraud prevention and why it's so important, right? Well, it's so important because it's aimed to reduce the loss in a company and to maintain positive customer service. Members of society too, they value fairness and transparency like more and more every year. It's important to combat fraud, which opposes that. And again, I'm going to hit home on a couple of these facts, frequently throughout this presentation, but Now, US businesses on average are losing 5% of their gross revenue to fraud annually. So, very important to prevent fraud. On average, we're seeing 7,000 reports made each day. And again, there's a lot of it that's not going reported. So this is just the fraud cases that are being reported. And it's estimated that 60% of small businesses that experience losses due to fraud aren't recovered. Again, most businesses, if it's minimal enough, or you know, they're going to terminate their relationship with the employee, call it a loss and walk away. Maybe see if they can collect some of the funds, but they're not going to call the police. They're not going to get the press involved. They're going to quietly handle it themselves and walk away. And there are plenty of businesses that can't survive if they lose a portion of their revenue due to fraud. Uh, so now we're going to go over some of the most important internal controls for businesses. Separate financial duties. I mentioned this before, but a lot of small, medium-sized businesses, you have employees who are the jack of all trades. They quote, they negotiate, they're talking to customers, they're reconciling payments, approving, certain sales discounts. Some of that stuff should be separated. You have people calculating and completing deposits, maybe requesting and approving their own purchases. This introduces two risks. First, you have the risk of error, and then you also have the risk of theft due to fraud. So how do we separate some of these financial duties? Well, you should have dual authorization for purchases or sales over a certain amount. No one person can offer a discount like over this amount. They need to call and get approval from someone else. No one can authorize a purchase over a certain amount, or a wire transfer. There has to be someone else, who can approve it. And there's been a lot of fraud cases where that actually is what catches it. The owner of the company gets a call from a bank and it says, "Hey, do you approve this wire for, $3,000?" And their answer is no. I have no idea of a wire for $3,000 that should be going out. And sometimes it's legitimate and they just didn't know about it. Sometimes it's not. But having that dual authorization in place, has the control that catches it. You have different personnel performing check and cash deposits versus who's going through and doing the bank or vendor reconciliations. Overall review and reconciliation is performed by someone at a higher level, someone not involved directly with customers or vendors or involved necessarily in the day-to-day transactional operational, more high level. Financial controls help managers and owners implement the system of checks and balances. And it also, too, more importantly, ensures that the financials are accurate and they're free from error and protected from misstatement. Because everything that we're talking about today can be a way to catch fraud, but it can also be a way to catch errors too and make sure everything is accurate. Maybe there is a vendor who is incorrectly billing and it's just not noticed by anyone internally, but someone higher up, in the review process catches it. Maybe it was an innocent mistake. There are errors made. Everybody's human. These internal controls are twofold. They'll help catch the fraud. They'll help catch, mistakes as well. You want to regularly inspect inventory, put control processes in place for inspecting and verifying inventory. Account for anything that's lost or stolen. Verify all the orders are accurately filled. Assign separate employees to perform separate duties. Someone should be signing and approving incoming orders, and a separate person should be signing and approving outgoing orders. No, these should be different from the people who are actually, completing the sales with the customers as well. It should be an independent employee, putting the inventory in a truck to send to the customer than the person who, sold the inventory, approved the discount and has the close relationship with the customer. Assign employees to audit inventory and ensure that all the records add up. An inventory manager, a warehouse manager, someone who's not involved with the transactions of ordering or, selling. They're just tasked with simply managing the inventory that's on hand and making sure it reconciles with what the system says. And you also want to restrict access to financial systems and data. Many employees do not need access to all systems. It's important to give employees the minimum level of access and to be even more discerning with your financial systems. You only want to give access to those who need the data to do their work, such as a bookkeeper, controller, someone of that, level. And this is going to prevent employees from stealing valuable information. This is what can create the opportunity, right? By giving someone access to information that they don't need. And then they can find, loopholes or things that aren't being as closely monitored that can create an opportunity if it exists, to misappropriate funds. This one might seem kind of obvious, but reconciled transactions, they don't end after you purchased new inventory or sold it to a customer. It's important to regularly check the transactions against your bank accounts, especially credit cards. Reconciling credit cards is a big one, especially if the company has multiple credit cards, spread out throughout different people of the organization. Cash sales, if you're still handling cash, you definitely want to be reconciling purchases and expenses on a daily basis. Making sure no unauthorized transactions or payments get passed, and that whether a bad actor got a hold of your card or an employee purchased something they weren't authorized to, that it's flagged kind of immediately through some sort of review process to investigate further. And you also want to randomize your reviews too. You should regularly go through and reconcile everything, but employees, they can keep a consistent schedule. They can keep track of when people come around every month, when they look at things, what type of accounts they care more about that they look into. If you randomize your reviews, you might potentially catch some unauthorized activity by catching someone off guard. And you can audit at random dates. You can randomly have people take mandatory vacations every year, separate duties, have people switch duties every once in a while. Just kind of helps, keep things unpredictable at the company. It'll make people think twice. Monitor expense reimbursements. Like I just mentioned, employees may be using their personal credit cards or cash to purchase something and they're going to get reimbursed for it. It's pretty normal in the course of business, but you know, employees shouldn't be reimbursed at random. There should be a process generally for them to follow to make sure that all reimbursed expenses are approved ahead of time, that someone is aware that they're going to purchase it, and then they just need the amount and the receipt to give the reimbursement, not kind of a free lunch type of deal with the credit cards where employees can go out and spend at random and then just submit it and they're either approved or denied, at the spot of reimbursement, because that's going to allow for more transactions to go through that, could slip through the radar. Here's some additional controls that can also be implemented, comparing receipts, matching transactions with the purchase orders, create a vendor approval process. There shouldn't be any vendors set up in the system that aren't approved by a second or third party within the company to help, stop fake vendors potentially being put in the system or the wrong vendor information. And again, this isn't necessarily for occupational fraud either, too. If, someone is attacking your company from an outside party, through a phishing email or something like that, they may be a fake vendor that they're trying to get in the system to, get a check. And sometimes an unwilling employee, may not always spot all that. Those emails are getting a lot trickier to determine, whether they're fake or real. Sometimes they're glaringly obvious, but I found in my experience, the last couple months, like there's a few that I've had to forward back to my IT department and say, hey, is this legitimate? And they came back a couple times and said yes, and a couple times it said no. So they're getting smarter. You want to have these approval process. And then obviously, marking invoices is paid to prevent double payment, having backup records, assigning separate employees to count cash, securing blank checks, having expense limits, and then, conducting external reviews, seek a regular independent review as well. Um, Create a zero tolerance for bribery and corruption. It sounds silly, but having these policies and having these training type things every year at the company go a long way. Again, the companies that do these type of training events with their employees experience losses half of what the companies that don't do them experience. So it's not so silly when, you're losing 5% of revenue a year, to take an hour or two to do this type of training or create these policies. Check on relationships with clients and your employees, especially those in power, those who have like high sales volume, maybe. Just check in on them periodically. Look for suspicious activities like the number of times an employee meets with a client and their location. Again, these are kind of like the behavioral red flags you want to look out for. And what does your gut tell you that, these behavioral red flags should heighten the, professional skepticism level to? And then again, you should have an anonymous system for people to come and report suspicious activity. Again, tips are the number one way that occupational fraud is found. And employees, 52% of the time, are the ones coming forward with those tips. So I do have another question here. The question is, do you recommend being part of a compliance check? Yeah, I mean, I think that's a great idea. And, the compliance check can be something that's done internally. Take a couple employees, create maybe like a specific committee and come up with a plan and, every once in a while do those randomized periodic, compliance checks to make sure everything looks good. Again, you can also hire independent people to come in and look. For a compliance check, you can consult with a CFE, CPA firm, someone who's doing your independent audit or review procedures. They can also share that information with you, of what they come in, what their biggest, risk assessment is when they're coming in and doing that type of work, which can kind of help the companies also develop their own internal compliance check as well, or, understand more where the risks are coming from and what the safeguards are to prevent them. And again, the most important way to detect and prevent fraud is managing the risks. You have to know what they are. You have to sit down and critically assess the risks and come up with a program and be honest about where, the material risks are. And this is a conversation you can have with your employees too. They'll see things that, people higher up in the company may not be privy to just because they're not involved in the day-to-day activities. Strengthening internal controls, training your employees, and enhancing cybersecurity and conducting audits. It's essential that companies respond to potential threats and ensure their assets and reputation is safe. It's also important that businesses take a proactive approach with dealing with potential fraud rather than a reactive one. It might cost money to manage the risks and do these things that we've been talking about, but businesses are going to save much more money by doing this, investing in preventative measures than, remaining vulnerable to fraud and having that exposure. And here's a chart that I think very, it shows a very well like impact of managing the fraud risks. Your surprise audits, the controls in place, $75,000, the average loss in 42% of the cases. The controls not in place, it's a $200,000 average loss. So here's what I was talking about earlier. The companies that don't have these types of controls or training in place experience losses almost twice as much in almost all of these cases. Fraud training for managers and executives, the fifth one down on the list. It's a 50% reduction in the loss. Again, just by having these simple training exercises. Formal risk assessments, like we were just talking about. This is something anyone can kind of sit down and come up with a committee and task them with, a 47% reduction in median losses if the control's in place. So So strengthening your internal controls, it lowers the risk of fraud and it also drives efficiency and ensures compliance. You want to create standard operating procedures that properly document the separation of duties at the company and how operational procedures should work. And then you also want to periodically audit them too. How old are the operating procedures? Are they 30 years old? Should they maybe be, revised and adjusted? And when you have these standard operating procedures, it's pretty black and white in how they should be followed. There's really no wiggle room, during an audit if you find out they're not being followed, to talk to that individual and correct them and explain to them, why what they did was wrong and the correct procedures they should be following. And again, it sounds simple, but you just want to stress the importance that management values honest employees, ethics, and implement the strict access of controls and good documentation. And the purpose again of all this is to protect your assets, have accurate records, improve your operational efficiency too, and achieve the organization's objectives and goals. Guarantee that policies, rules, regulations, and laws are all being complied with. And this is going to lower your risk of fraud, but just keep in mind, it's never going to 100% eliminate it. There is no silver bullet to eliminate fraud 100%. Um, so here's some internal control standards. You want to have a good control environment that's structured, has responsibilities, a reporting chain, and stresses ethics. We've talked about this a few times, but, analyze and identify potential risks. And they need to be updated, every so often too. And you need to analyze if it's working. Is it still a risk? Do we need to do something else? The plans need to be tailored constantly, not constantly, but every so often, you do need to go back and, give a good, honest assessment of it. Is it working? Do we need to go a different way? Should we implement something else? Information and communication is, very important too. You want to track the information for operations, goals, progress, and compliance as well. So if something's not working, you do want to go back and assess it and, readjust course if necessary. Operational procedures and internal control procedures need to be evaluated and updated. Yep, we've talked about this a few times. I'll kind of skim through some of this stuff. Again, you want to train your employees. It's important to preach integrity and honesty to each employee, the benefits of being honest and how they far outweigh the benefits of not. Have your mandatory trainings, conduct seminars and promote a culture of ethics within their responsibility and train your employees to recognize red flag behavior because that could be, the difference between them giving you a tip or not on a potential fraud scheme that they notice. So cyber fraud, I mentioned we were going to talk about this as the second part of the presentation as well, because this is extremely prevalent in today's environment and it's getting more and more sophisticated. You have hacking, malware, denial of service attacks where someone is constantly spamming your system with information, so that way it shuts down. I think Elon Musk just had an interview with Donald Trump on X, formerly Twitter, I think last week or a few weeks ago, and Twitter shut down. There were too many people that tried to log into it that the whole system crashed. Well, the DDoS attacks are the same thing. It's someone constantly spamming your system with information to get it to shut down so that way, legitimate customers or employees cannot get into the system. And then I think everyone's probably aware of the phishing scams, which now also translate to SMS phishing, just fake text messages you're getting. Video phishing is a new thing with some of the AI technology, password attacks, and software privacy. Working at home too has a significant impact on fraud in this post-pandemic world that we're in. It increases your risk of confidentiality leaks. It's much easier for employees or others to steal sensitive data. The network infrastructure has to be more complex in order to accommodate remote work. And small businesses, sometimes they might not have all of the resources to do this, but it's extremely important. Separation of tasks is harder when employees are working apart. The communication between employees generally decreases when they're working from home. And something I found pretty interesting was hard copy clues, that would have helped discover fraud in the past do not exist in this digital age. I read a case study not too long ago about an FBI agent who caught an embezzlement scheme because someone at the business, had a fake vendor set up, and he was going to the clerk, the AP clerk that was issuing the checks, and he would take all of them, and the one that was for the fake vendor, he would fold it and put it in his pocket. So that way he knew when he went to the bank, he had to keep that one to the side, for him to deposit in his personal account. But then when he got back to the company and filed everything, he would take that check back out and file it with in the folder for the fake invoices and the fake vendor that he had set up that was being paid. And the FBI caught it because they noticed, that these checks were folded. So for whatever reason, that led them to investigate it more. And because all these checks were folded, they went and looked into it, found that he actually had a couple different fake vendors set up, and it uncovered the fraud scheme. But stuff like that, in this digital age does not exist anymore. So it's really important to have these operational procedures covering how tasks are to be performed remotely as well. And what's the review process? Don't be lackadaisical. If there in the past was paper support for all of this and it was filed, there should be digital support for all this stuff too. Checks should be scanned. They should be saved on a network. So that way, you have access to this information over several years if you need to go back and investigate something, and, just for the overall review process as well. There's been a recent boss scam in New York that's been targeting workers. You get a fake, it's a SMS phishing scam. You get a fake text message from someone posing to be a boss at a company, and they request gift cards, to go be purchased for a work event. And make sure your employees know, no one at the company would ever ask them to do this, or, they should trust but verify, find a different way to contact that person, send them a separate email. Hey, did you text me? A lot of these things can look legitimate, and you need to make sure everyone's aware that a legitimate employer at your company or manager would never ask, business to be handled in this way, such as sending you a text message saying, hey, go pick up $500 worth of gift cards for, the company party tomorrow. AI and machine learning is an increasing area in this department as well, too. They have these new frauds that they call deep fakes, and it's a fake that's going on in real life. So basically, the ever-advancing technology of AI and machine learning has allowed fraudsters to have interactions with their victims in real time, pretending to be someone else. They can replicate voices, images, and even movements of people. This is all done through data breach. Banks, a lot of time, they save images of, people's eyes or faces or voice activation. If this data gets breached, people can steal it, and they can introduce it to AI technology to create, their own messages that sound like someone's actual voice. How many people log into their phone by just using facial recognition? All this stuff is out there, and the sophisticated technology, if it's vulnerable, people can get it. This one I thought was pretty interesting too. Wells Fargo actually recently fired a bunch of employees for fake working. It wasn't actually, it was a scam. They thought they had hired people, but it was fake. And it was really like a simulated keyboard algorithm that was quote unquote working for them. There's softwares out there that can monitor employees' presence, and in some cases, their productivity at home. It's important, that as business owners having, remote workers, that you're aware of the possibility and that there's checks and balances, to make sure that you or your employees are not getting scammed. Great ways to prevent fraud from working at home. Remote employees must work on secure networks, have a dual factor authentication, utilize firewalls and virus scanners, make sure, they're always using company-owned devices, discourage employees from working on their personal devices. You don't know what they're doing on their personal time. You don't know what type of websites they're on. Are they secured? They unsecured? And it could put the company's information, could make it vulnerable. Make sure sensitive information is limited and only sent through very secure networks. If you have employees traveling, they're at working at airports, airplanes, hotels, make sure they're on secure networks. Have your annual security training as well, and trust but verify. And make sure you want to enhance your cybersecurity and conducting audits as well. You want to have technology that can help prevent attacks and that can root out fraud from outside sources. Audits are a great way to catch errors and the fraud of material misstatements. It's a great idea to hire a CPA firm to test and strengthen your internal controls as well, or consult with you on it. And you want to have a plan. That's the biggest part. It's incredibly important to have a plan for the possibility of fraud being committed. Review your annual insurance renewal. What type of coverages do you have for employee dishonesty? Do you have coverage for a data breach? Is your insurance going to cover cost of legal or forensic work if there is a data breach? Is there a plan in place? You don't want to be coming up with a plan on the spot when you're in some sort of situation where a breach has occurred. You want to know, what the next steps are going to be. Who do we communicate? What does the company immediately implement if, goodness forbid, this was to occur? A new one, and I'm going to go through these next slides pretty quickly to stay within the time frame, but there's something going around called friendly fraud now. Friendly fraud it's refund fraud. Essentially, what's happening is people are ordering things online and then they say they never got it, or they say we didn't authorize the purchase. And a lot of times, the credit card companies, financial institutions will side with the customer and they don't ensure that the inventory is actually returned to the company. So it's called friendly fraud because the customer's disputed charges appear legitimate, but these have become a costly and decidedly unfriendly thorn in the side of merchants and financial institutions, with estimates saying retailers are losing about $25 billion a year on this. Here's an example of it. There is a small family-owned coffee shop in Quebec. They recently lost over $10,000 to customers who ordered too expensive espresso machines. The customers claimed they didn't authorize the purchases of the machines. Business was actually able to provide copies of email exchanges supporting the orders, but the credit card companies ultimately decided with the customers, they took back the money and they never, enforced that the customers return the machines to the small business. So the coffee shop lost out on the funds and they lost their machines. And these instances of friendly fraud have surged post-pandemic. Merchants are doing what they can with limited options. New processing systems are coming out that are supposedly collecting and maintaining transaction data that can supposedly track the analytics to, flag certain disputed charges in a way where it would reduce the manual hours spent for someone at the company to go through and try to, look through the information. Payment system providers are also working on improving their systems for communications between merchants and card issuers as well. But if you notice, if you order off of Amazon, Target, Walmart, all of the delivery services, they sit and they take pictures of everything now when it's delivered to your house. And this is why, because of issues like this. So something else to kind of be aware of. So, will these improved systems complicate the fight? They could, depending on where you are. In certain jurisdictions, there's data privacy rules. So if merchants are noticing, certain customers are committing fraud or they're likely to commit fraud and they want to share that with one another, or, with, financial institutions, there are regulations in place, that protect the consumers in some cases, which unfortunately also safeguards these fraudsters. And these new payment systems or processing systems they're coming out with, the anti-fraud algorithms are now tasked with distinguishing a real dispute and a fraud dispute where a typical red flag doesn't really apply. It all looks like a legitimate, request for a refund. So, merchants can alert law enforcement, but outside of an organized scheme, it's unlikely that law enforcement is going to dedicate resources to every illicit chargeback or every, type of return fraud, unfortunately. So here's a few things you can do to protect yourself from friendly fraud if you are a business in this organization delivering products to customers frequently. Continuous transaction monitoring. These systems monitor your financial transactions for anomalies, control violations that might indicate fraud. They're very sophisticated now. You can use the AI and machine learning to your advantage as well. They can, without picking samples, go through and analyze billions of transactions related to vendors, customers, employee activities. They can apply hundreds of targeted tests, and different algorithms to risk rank everything and really save a lot of manual labor hours going into this. And they can get very specific and customizable data visualization tools too. These help CFEs, auditors, and company personnel understand complex financial data, by just presenting it a little bit differently, to look at things visually for flagged inconsistencies. And like I mentioned, using AI and machine learning to your advantage to, help out management and tracking down some of this information. So, and again, this analytics software is a supportive tool. It's not a magic cure. Companies are always going to need strong internal controls and competent professionals, such as certified fraud examiners. So I know I'm going over, to kind of recap, you just want to have a balance with your fraud prevention controls and you want to have a balance with your fraud prevention controls. You don't want to overburden your customers or your employees, but it's important to protect the privacy and the information of the company. Things like customer transactions getting mistakenly declined can significantly hinder, the likelihood of someone doing business with you, but you still want to have a good balance to protect yourself as well. Here's an example of fraud in New York. I'll go through this very quickly. This was actually in Wegmans. There was a Wegmans employee who's serving a year sentence. She stole almost $600,000 from Wegmans, through fraudulent credit card refunds, over 350 transactions. She was a pharmacy tech, and she would basically report a claim, bring it over to the pharmacist on duty, have them sign off on it. And, they were thinking it was a legitimate refund for a prescription. She would then turn around and process the refunded money to her personal credit card. She did that 350 times. I think I forget when this actually started, but I think it came out to about 2 transactions a month is what she was doing to get to that 350. She also stole $11,000 in gift cards. She told the FBI she was stealing the funds after her son was born to help pay for medical and living expenses, right? There's the motivation. She filed for bankruptcy in 2014, but that didn't solve her financial problems. And in February of 2023, she pled guilty. She's going to have to pay Wegmans back about $580,000, and she's going to jail for a year. How could this have been prevented? Review and inspection. There should have been reviews and reconciliations of the refunds process. The amounts these fictitious patients were requesting for refunds, they were fictitious. The orders didn't exist. So you would think one of the pharmacists would have noticed that at one point if they looked into the order to say, okay, let's pull up the order. Let's take a look. When was it issued? What was the problem with it? Why did they need a refund? No, they kind of were just signing off on it and giving it back to the pharmacy tech, assuming she had handled everything. Separation of duties. It should not have been the same person requesting the refund that was going through and then processing it. She should have requested the refund and handed it off to the pharmacist, who then would have authorized it and delegated to maybe someone else in the pharmacy department to look into the information to make sure it was legitimate and make sure that it got back to the patient and the right, payment information that they had paid with. Those simple separation of duties or review processes that didn't occur over the course of 350 transactions could have helped, catch this a lot earlier before it got to, almost $600,000 in theft. And again, lastly, training and education. It's 100% possible, although I can't speak to this, that the pharmacy department just wasn't aware of, the potential of fraud to be committed in this aspect. I'm sure they're aware of the fraud of people stealing inventory and, stuff like that. But again, constantly having ongoing training on where the material risks of fraud are, how it could occur, the importance of the separation of duties. So in conclusion, fraud prevention and detection, it only gets more important as your business grows. It's a major reason that many businesses lose money and fail is because of fraud. Can never be 100% eliminated, but your risk can be mitigated by being proactive against it. It's important that all businesses, especially small business, invest in ways to prevent and detect fraud. The best ways to do this are strengthening your internal controls, training your employees, enhancing the security and auditing. If anyone has any questions, feel free to put them in the chat. You also have my email information. So again, feel free to send me an email if you'd like to further consult or discuss, anything specific that is going on with your company or any help you'd like with risk assessment, the type of procedures you can follow or like guidelines to set up, and this is part of a series of webinars that Danable and McKee is conducting. I would encourage everyone to go to our website, look at the upcoming events. You can see the webinars we have that are coming up in the future and see if any of them are interest to you. And, we'd love to have you back to learn more. So again, I'm Bob Reeves, audit partner at Danable McKee. Thanks for attending our seminar today on the fundamentals of fraud detection and prevention. Again, my contact information is available. If anyone has any questions, please feel free to give me a call or an email. Thanks. Hope everyone has a great start to their week.